good afternoon, everyone. I guess it is lunch hour, isn't it, Crystal?
It is,
Um,
yes,
Thank
officially.
you so much for taking the time to join us. My name is Jamie Kidder. I am the National Outreach Director for College Living Experience, and we are so excited that you are with us today. What makes today really special is that we have partnered with Crystal Harrington with Northwestern Mutual to bring us some really great information on financial security for loved ones with special needs. So before we get started, just a couple of housekeeping notes. Because we have such a large group logging in today, we've disabled cameras and microphones to ensure that Crystal's got the floor, or the screen in this case. And we will have time at the end for Q&A, and you are welcome to drop questions in the chat or jot them down throughout the event, whichever works best for you. And then at the end, Crystal is more than happy to answer any questions. And we are recording this event, so I will share the link with all of the registrants afterwards. So keep an eye on your inbox toward the end of the week, and we will get that sent out. And Crystal will also be communicating with you as well. So that's all I have for housekeeping. So without further fanfare, because I know we are on some restricted time, I'd like to introduce you to Miss Crystal Harrington. Crystal began her career in the financial world in 2002. And in 2018, after being inspired by her son's journey and her own experiences as a special needs parent, she shifted her focus to serving families with children with special needs. And today, Crystal leads a dedicated financial planning service that is committed to helping these families, just like yours and just like hers, feel confident, prepared, and secure in their financial future and the financial future of their child. So, I'm going to turn it over to Crystal. I'm going to mute myself, turn my camera off, and Crystal, you've got the floor. Thank you again so much for partnering with us, and here we
Yes.
go.
Awesome. Thank you, Jamie. Well, hopefully, if you're here today, you were hoping to learn a little bit more about creating financial security for a loved one with special needs, because that is what we will be talking about for the next hour or so. I usually have to do my own intro, so I feel like Jamie did a great job of kind of telling you a little bit about my background. But I always do like to take any opportunity that I can to brag about my little family. So the picture there at the bottom of the screen is my beautiful family. You can see my husband, Irving, who is actually one of my business partners. And then our two boys there, Olivier, he's our oldest in the back. And then my youngest, Stellan, in the front. He, believe it or not, he is our youngest, even though he looks twice the size. Um, he is our special needs guy. And so, like Jamie said, in 2018, really the focus of my practice switched. And when you look at my practice today, 100% of the new clients that I work with have a loved one with special needs. So that's all I do all day, every day. And then, of course, I can't forget my firstborn, Cassie, our little dog there in the front, who will be turning 17 in September. So that's just a little bit about me. But let's jump in because I feel like you guys are here to get some good takeaways. So, really, today's agenda, we're going to be focusing on building out your team. So, who are the professionals you're going to need throughout your journey to really make sure that everything is buttoned up, right? We're also going to talk about developing the special needs plan. So there's several components to that. The first starts with just understanding your current situation and your vision for the future, getting the benefits your loved one is entitled to, attempting to estimate future costs of care, and then last but not least, establishing and funding a special needs trust. I feel like I should have probably added one more agenda item on here, which is ABLE accounts, because we're going to touch on that too. We get a lot of questions on ABLEs. Well, let's jump in. So, building your team. So, we believe that throughout this journey, you're going to need at least three, possibly even four professionals on your team. So, the first would be a financial professional, someone like myself, right? Or a financial planner that maybe you're already working with. But I would suggest that you engage with someone who does have some experience in doing special needs planning. I can't tell you how many times I've sat down and reviewed a really beautiful, lovely financial plan that clearly had a lot of time and intention put into it, but the child with the special needs obviously did not have a seat at the table and they were not considered at all in the recommendation. So I would say just make sure you have a financial professional with some experience in this world because it's complicated. The second would be a government benefits specialist. The third would be an attorney. And again, I would recommend that you choose an attorney who has some experience in setting up special needs trust or who understands Medicaid law. So if you're interviewing attorneys, those are some questions I would be asking. You know, how many special needs trusts have you created? Have you ever had to litigate a Medicaid, case? Because that's going to give you a good gauge on what level of expertise they have. And then lastly, I don't have it listed here, but occasionally it makes sense for our clients to have a team member who's a CPA. And believe it or not, us as special needs parents, we have a lot of extra expenses, right? I think we all know that. But in many cases, there are unique things we can do to get some deductions for those unique expenses. So you just want to make sure you're leveraging any way we can save a dollar, right? And engaging with a CPA might be a good way to find some ways you can get some deductions there. But let's dig in. I want to help you understand, what do each of these professionals do? And then when do they come into the picture? What does that relationship look like going forward? So let's start with the attorney. The attorney would be the professional that you would engage with at the time you're ready to create some type of a legal document. So they can help you set up wills, power of attorneys. They can help you with guardianship if that's the route you decide to go. And then certainly setting up the special needs trust. So typically, the attorney relationship is not ongoing. Usually you engage with them when you need that document, they create it, and then they leave the relationship. But I would suggest, excuse me, that you have a plan to have any documents that you've created reviewed at least every 5 years. And the reason I say that is because the rules are constantly changing, right? In SSI and Medicaid, those rules are constantly changing. In fact, we had some recent changes within the last year that were pretty significant. And if you have estate documents that were drafted many years ago, they're not going to include the most relevant and inclusive language. So you just want to make sure you're at least reviewing them every 5 years to make sure that they are relevant. And I can give you an example. So we have a client who did their estate planning 20 years ago, 20 plus years ago. And they have a beautiful special needs trust created. It's in this beautiful leather bound binder. It's lovely. But it clearly states in the verbiage that in no form or fashion can this special needs trust ever pay for anything related to housing or food. So I don't know about you all, but those are kind of the most important things, right? Shelter and food are some of the top priorities that I want to make sure my child has access to throughout his lifetime. And I have a feeling this was drafted based on SSI rules from many years ago. As of today, those rules don't apply. And so that's a very restrictive special needs trust and would obviously not do what the parents originally intended it for it to do. So that's a really great example of why you would want to review that at least every 5 years. Okay, the financial professional. So again, I can't speak to every financial planner, but what I can assume is that most of them can probably help you with the two top pieces of the planning, which is the protection and the growth part of financial planning. So that would be things like helping you obtain life insurance, disability, or long-term care insurance on the protection side. And then on the growth side, helping you plan for savings, investing, retirement, college planning, things like that, right? Those are all very typical things that a financial planner can help you with. But if you're on this call today, it's likely that you're going to need a third part of financial planning, which is that legacy piece. For a lot of the clients that I work with, this is probably the one that keeps them up the most at night, which is worrying about what's going to happen when I'm not here, right? When I'm no longer on this planet, how is my child going to be taken care of? Where is the money going to come from? Who's going to provide that day-to-day care? And so that's really where that legacy planning comes in. And there's kind of two components to that. We'll start with the bottom one, so the trust funding. So one of the things that I think our team does really well is helping our clients estimate their child's future cost of care. That way you have a very clear idea of how much should actually go into this special needs trust, right? If we all agree we need one, great, but how much should go into it to make sure that our child's going to be cared for the remainder of their lifetime? And then where is that going to come from, right? So again, that's, I think, something we do a great job of is helping counsel our clients on what asset is going to make the most difference inside of a special needs trust. Because long story short, we don't get any tax favors in a special needs trust. So we want to be very strategic in that regard. And then in terms of the estate equalization, so this usually comes into play when we have children, or excuse me, families with multiple children. And let's say maybe one has special needs and maybe the others don't. So it's a very common kind of worry that, I want to make sure that my child with special needs has the resources they need, but I don't want to disinherit my other children. So how do we do this in a way that feels fair, but also equitable, right? Because the reality is one of the children is probably going to need more resources and support than the other. And so how do we do this in a way that's fair and equitable and strategically? So that's kind of the legacy component. And if you notice, there's kind of arrows that are kind of pointing between the attorney and the government benefit specialist. That's because this relationship tends to be an ongoing relationship where you're meeting with your financial advisor at least once a year, sometimes more regularly than that, to review everything to make sure that we're still on track for all of the goals you may have, whether that's retirement, paying down debt, purchasing a home, sending a child to CLE, right, college, or the legacy piece. As our children grow and they develop, we have a clear idea of what adulthood might look like for them and what their needs might be. And so that as that evolves, we can always adjust the financial plan accordingly. But that is, like I said, an ongoing relationship. And we often act as kind of a go-between where we're the ones recommending you need an attorney, or now's a good time to get with that government benefits specialist. But now I think let's talk about the government benefits specialist. So again, I've been doing this a long time. And if you find that you are a DIYer by nature, if you love a good project that you can do yourself, if you were going to try to DIY any of these pieces, I would suggest maybe the government benefits specialist could be the one you could tackle. But I will tell you that the success rate of applying for SSI and getting approved the first time without help is fairly low, right? Oftentimes those SSI applications are denied the first go, unless you've had someone professional who understands the system giving you some advice or reviewing the documentation before you submit it. So I would suggest if you're not at that point yet, that you engage with a government benefits specialist when that time comes, because their success rate is going to be much higher, where you can get that approval that first time without having to go back through the appeals process. But again, this specialist can help you when you're ready to apply for SSI, SSDI, any of the Medicaid waiver programs, state or local programs that might be in your area. So if at any point you have questions about those resources or how to leverage them, how to maximize them, right, then you can always go to that government benefits specialist. So on the bottom here, the last box that I have listed, it shows doctors, teachers, therapists, and then public and private programs. I have found living in this world that it's very easy to find great referrals to professionals in this box. It's not so easy to find great referrals to the professionals kind of at the top of the screen. And so I just wanted to extend the offer that if you need a great recommendation to an attorney or to a government benefits specialist, I'd be happy to make an introduction for you. It doesn't matter where you live. We have attorneys in all 50 states that we can refer you to. Same with government benefits specialists that can help you in drafting those documents or reviewing them or applying for benefits, whatever you might need. So if you need that, let me know. Okay, that's the team. Moving on, let's talk about government benefits. So this is one we tend to get a lot of questions about. And we'll start with SSI, Supplemental Security Income. So this benefit is a means-tested program, meaning that for you to qualify, you have to meet certain criteria, which is there's an asset and an income limitation. So for fun, let's start at the bottom of the screen. Let's look at that page, at that part of the screen first. So If your child is under the age of 18, so they're still a minor, and you're wondering, do we qualify for SSI? I can tell you that it's actually quite a bit harder to qualify for this benefit when your child is a minor, because when you apply for SSI, they're going to look at your income and assets as the parents, as well as the overall household size in determining eligibility. So to put it simply, if you have a dual income household and you're making roughly $3,000 or more of income, then you likely will not qualify. So, very few people have success in that world, especially if we've got a dual income household. Now then, when your child turns age 18, the rules change entirely. So at this point in time, if your child's over the age of 18, they're no longer going to look at mom and dad's income and assets. They're only going to look at your child, personal income and their personal assets to determine eligibility. So the asset requirement, or the limitation, I should say, is the same across all 50 states. It's 2,000. That's not true. There are a few states, I think California is one of them, that doesn't have an asset limitation. But just to keep it simple for today, $2,000 would be that asset limitation. And then the income limitation is roughly $1,950 a month for them to qualify for at least a partial SSI benefit, right? So assuming we're below those two things, then we should be in good shape and we should qualify. Now then, as of right now in 2025, SSI is paying roughly $967 a month. Again, depending on what state you're in, it could be a little bit different. But in general, it's around the $967 amount. And in addition to this benefit, once you qualify for SSI, if your child's not already receiving Medicaid, then they should automatically qualify for Medicaid health benefits as well. So sometimes we kind of think of it as a dual benefit in that way, which, believe it or not, is a really great thing. Medicaid health benefits for some of my families are actually more valuable than the $967 a month that comes in through the income that's created through SSI. So they are very valuable benefits. And I can tell you, when we've done like modeling of what's the value of this type of benefit, it's easily between $1 to $1.5 million worth of resources. So I only say that because I have had more than a few families who have applied and got denied, right? They didn't have a government benefit specialist. So they applied, they got denied, and they just said, forget it. I don't know if this is worth it, right? Like they were telling me I have to go down to the office to do some type of interview, and they want me to have my child get some type of psychological screening. I don't know if it's worth it. Forget it. I don't have the time or the capacity for this right now. So I would just say, the resources in total equal about $1 to $1.5 million. That's nothing to sneeze at, right? That's a very valuable benefit. So I would definitely encourage you to, make sure you're getting that benefit if your loved one is indeed entitled to it. Okay, I'm wondering if there's any questions. I guess, Jamie, you'll yell at me if there's a question that you think I need to answer as we're going, but I'm going to keep going if that's okay with you guys.
Yeah.
Okay, so are we good?
Yep, we're good.
Okay.
There have been some questions in the chat, and we can address them at the end.
Perfect. We'll address them at the end. Okay, great. So we'll move on and we'll talk about retirement Social Security. So this is actually a benefit that not a lot of the families that I do these workshops for have ever heard of. This is news to them. And this is a really valuable benefit, actually. So the way that this benefit works is at the point that you, as the parent, start drawing Social Security in retirement, then your child could be entitled to a partial benefit. Now, for them to be eligible for this type of program, they would need to have a disability prior to age 22, and it would need to be medically documented by a physician, right? But assuming we have that in the medical records, then they would qualify for this benefit. It's often called SSI. Sometimes SSDI. Sometimes you hear it called RSDI, or the DAC benefit, right? It's got a lot of words out there. But essentially the way this works is when you as a parent start drawing Social Security in retirement, your child will get half of whatever your benefit amount is. So if you're getting $3,000 a month, they're going to get $1,500. Now, I usually get a lot of questions at this point, so I'm going to try to answer them before you guys have a chance to ask them. But I usually get asked, is it possible for the child to get half of both mom and dad's Social Security? Unfortunately, no. They're just going to get half of one or the other, right? So usually we'll recommend attaching to whichever parent has the higher record, so we can get the higher benefit for the child. But it is possible to start on one parent record and then jump on the other. Like if there's an age, large age gap between mom or dad, we might start on one, and then when the second parent retires, jump onto the other record. That is a possibility, but only one record at a time. The other question I get asked is, well, do these benefits stack? Can I get that SSI that we just talked about and this SSDI benefit at the same time, or can my child get that? And unfortunately, probably not, right? So there is this formula that they do to make sure you get at least a minimum benefit. But let's say, for instance, my Social Security benefit is $1,000 a month. That's what I'm going to get based on my earning record and credits and so forth. Then that would mean my son would only get $500. So in that example, he would get a stackable benefit, but it would essentially just get him back up to that 967 that we kind of talked about. So, but if our SSDI benefit would be over roughly $1,000 a month, then SSI will fall away and we'll now be on the SSDI benefit only. Hopefully that made sense. Let's see. The other question I get asked a lot is, okay, well, if we lose SSI, and you said that those are kind of like combined benefits with Medicaid, what happens to the Medicaid health benefits? So with that, there's a 2-year time frame where the child can still maintain access and eligibility for Medicaid. And then after that 2-year time frame, they will automatically switch over to Medicare health insurance. So they'll always have some type of health insurance through either Medicaid or Medicare, but there's that 2-year window where they stay on Medicaid. Let's see, what are some other questions? Oh, how long does my kiddo get to keep the 50%? What happens when I die as the parent? So what would happen in that scenario is at the point that the parent passes away, that 50% actually jumps up to 75%. And the child is able to maintain that for as long as they're alive. So very valuable benefit. And I will tell you that the rules on SSDI are a bit less stringent than the rules for SSI. That said, I do always encourage all of my clients to always kind of be prepared to stay within that asset limitation of the $2,000. That way we can make sure we're staying eligible for other programs outside of just this, right? If we have any Medicaid waivers or just Medicaid health benefits in general, we need to stay below the $2,000 limit. Hopefully this is helpful. If you guys do have questions, please put it in the chat and I'll stay as long as you guys want me to answer questions about that. But let's move on. So developing your special needs plan. Well, so we just spent a good amount of time really talking through a lot of those really valuable government benefits that provide resources in the way of income for your child, and then also in the way of health benefits for your child. And so that's why developing a special needs plan is so important, because as I mentioned, a lot of those programs are means tested. And where this becomes a challenge is when mom and dad have left this earth, right? And they want to have resources that they can leave to their child to make sure that their child is taken care of. And now if we do this by just leaving it directly to the child, then we've disqualified them. They're no longer going to be eligible for all of the programs that we just talked about. So there's 2 ways around this. We can have money in a special needs trust, and that will not count against your child for government benefits, or we can have an ABLE account. So we're going to talk a little bit more about that in a moment. But in terms of special needs trust, the way I like to mentally kind of help you think about how this applies is typically we would fund a special needs trust with money that we planned on leaving to our children once we pass away, generally. Now, occasionally we might fund it early, but more times than not, the special needs trust is there. It's created, the attorney drafted it, it's ready to go, but we don't technically leave anything to the trust until we as parents have passed away, and that's when it becomes funded. Now then, the way, like logistically, the way this works and keeps us eligible for benefits is this is a separate entity, right? So it's got its own name, it has a date of birth, it has a tax identification number. It is, you have created a new entity that owns these assets that you've left to it, right? Now then, the beneficiary of this trust is going to be your child. So they'll be the only person who can have any benefit from the assets in there, but they don't own it outright. And so that's how we're able to kind of get around those asset and income limitations for the government benefits. So now then with a special needs trust, there are different types. There's a first party and a third party. So we'll start with first party first. So this essentially means that the money that went into the special needs trust was owned by the beneficiary. So the child themselves received money, maybe it was an inheritance, maybe there was a family member who didn't get the memo and they left a very generous, inheritance to the child but listed their name. Okay, so the child has now received this money. What we would have to do is run down to the attorney, have them set up a first party special needs trust. We can get that money over into the trust, and now we're back in business for government benefits, right? Now then, another way that we see first party special needs trust is when we have a situation where maybe there's child support and the agreement for child support has extended beyond the child, beyond their age of 18, right? Because technically you could get child support indefinitely if you have a child with special needs. Now then, that is going to be technically income for the child when they turn 18, unless we put it in a first party special needs trust. If we have that child support deposited into the special needs trust, we're in good business. We still qualify for SSI and Medicaid. So that's first party. Now, I will tell you the one major negative about a first party special needs trust is it is considered a Medicaid clawback account or a Medicaid recovery account. So if there's any asset left inside of that first party special needs trust when the child passes away, then Medicaid could have rights to it. And again, it depends on what state you're in. Some states have waived that requirement. Many of them have not waived it. And even if your state has waived it, they could always take that away, right? So I like to just mentally prepare my clients that if there is money in a first party special needs trust, let's plan on spending that first before we look at third party. So third party special needs trust essentially means that someone other than the beneficiary owned that asset before it was left to the trust. So me and my husband, we owned some things and then we listed the trust as the beneficiary, right? So it never actually passed through our son. It went straight from us to the trust. That is considered third party money. And what's wonderful about third party money is that it does not have that Medicaid recovery provision. So whatever's left in that trust when the child passes away, Medicaid cannot touch it. We get to control where those remaining assets go. So we can choose another family member, it could go continue on with the siblings, or you could even choose a charity if that's what you'd like to do, but you have control over where those assets go. So probably a little too much information on special needs trust, but I think it is important to understand the difference between first and third, and then why you might even want one, right? Because sometimes people ask me, well, do I really need one? I've heard they're very restricting. I can tell you the language in the special needs trust we're reading today is not restrictive at all. It can be used basically for anything. The only caveat is money can't be delivered directly into the hands of the child, right? So I use this fun example. So let's say that your child wants to go to Disney. Great, we can go to Disney. If we have a special needs trust, the trust can pay for it. How that would work though is the trust would pay for the flights directly, right, from the trust checking account. And it would pay for the Disney tickets directly. And if we wanted to have tea with the princesses, it would pay for that directly. And it doesn't matter how much it costs, that's all fine. The special needs trust can pay for that. That's perfectly fine. But what it couldn't do is say, great, you want to go to Disney? Here's $5,000. Go have fun, right? It can't do that. That's pretty much the only restriction within a special needs trust, is that money can't be handed directly to that beneficiary. I feel like I want to pause there and ask if there's any questions, but again, if you do have questions, throw them in the chat. I'll do my best to answer them when we're done here, but hopefully that kind of gives you a clear picture of what is a trust, logistically, how does it work, and then the different types. One question I do get asked a lot on special needs trust is what kind of assets can it own? So a special needs trust can pretty much own anything. It could own a home, it could own investment accounts, checking or savings accounts. Life insurance is a very popular way to fund a special needs trust. So the proceeds from that death benefit, great way to fund a special needs trust. So it can own many things. Hopefully that's helpful. Okay, moving on. So as you're sitting down with the attorney, I will just let you know that there are several roles that you'll need to designate. You may have heard like trustee, guardian, executor, right? Those are a lot of common roles that you will see in an estate plan. And I get a lot of questions on what is the difference between all of these, or is it the same thing? So they are actually all very separate roles. So let's start with the executor. So the executor would be the person who would essentially review the will and make sure that whatever's listed in the will is executed in like the way that the document says. So for instance, let's say that your Aunt Sally gifted or in her will said she wanted you to have her china. The executor would make sure that the china went from Sally's estate to you, right? So they're the ones who are making sure the will is probated and executed based upon how it's created. Now then a guardian. So a guardian would be a person who would be in charge of making decisions about another person, right? So oftentimes when we're doing this type of planning for our children, they would make decisions about where the child lives, decisions about their education, decisions about their medical needs, right? So they're making the decisions about the person. Now then, a trustee would be the person or institution that is in charge of managing the trust itself. So all of the assets that live inside the trust and all of the administration that comes along with that. So what I mean by that is, remember the example I gave you of the Disney trip. So they're the ones, this trustee is the one who's buying the tickets to Disney, right? And the Princess Tea luncheon or whatever, they're buying those tickets. So they're the ones who are paying the bills. They're the ones who are managing the assets. If there's investments in there, they're making decisions on that. They're deciding what assets are we liquidating to create funds to pay for things that we need, right? And then they're also filing the tax returns. So they're handling kind of all of the logistics within the trust assets. Hopefully that makes sense. So technically, you could have the same person be all three roles. That's definitely a possibility, but oftentimes they are different people, or sometimes even an institution. So let's kind of talk through specifically on the trustee side, what the options are. So you could certainly name a family member or a close friend. I think a very common arrangement would be a sibling, right? Once our kids get to a certain age, having a sibling be listed as trustee is fairly common. You can also choose a co-trustee relationship. So this is more than one person. They would act as trustees together. And what I think is sometimes attractive about this way of doing it is that everyone has to agree, right? So if one of our trustees gets a little wild hair and decides we need a Ferrari, then hopefully the other trustee in that co-trustee relationship will say, maybe we don't need a Ferrari. Let's get something a little bit more reasonably priced, right? So it creates a little checks and balances that both parties would have to agree before anything can happen. I will tell you the attorneys that I work with tell me that's their least favorite arrangement because it does create the possibility for conflict, right? If not everyone's agreeing and people have really strong opinions, it can cause problems. So, but that is an option. And then last but not least, the third party corporate trustee. This is a very popular option as well. In full transparency, that's how we have ours set up. We have a corporate trustee listed, and this is essentially a bank or a trust company that has a whole department that's what they do. right? And the reason why we were personally attracted to that is because if you're on this call today, you've spent as many years trying to figure this system out as you've been a parent, right? And it's complicated. And so if for me, whenever I was putting our stuff together, I was thinking, okay, it's taken me a very long time to figure this out and do it right. And so if I'm passing this baton on to someone else who has never spent a day in this world before, does not understand the $2,000 asset limitation, doesn't know anything about, you know, all of the rules, then how can I expect them to be successful, right? It's a very big responsibility. So that's why we chose the corporate trustee. We just felt like that was something we could delegate out. That way, our family member could be more of the guardian, right? And have more of the relationship with the day to day. But every family dynamic is different, right? And so we actually help manage several trusts where a sibling acts as both the guardian and the trustee. And that's great. It works really well for them. So I just wanted to kind of help lay out the different options. If you haven't gotten to that point in creating your special needs trust, I would just encourage you to kind of think through this a little bit ahead of time so that when you go into that meeting with the attorney, you have an idea of how you want to list these particular roles. And again, if you're interested in the corporate trustee, but you don't know anything about that, we have several really great trust companies that I can refer you to that can help you with that part. Okay, moving on. ABLE accounts. We get tons of questions about ABLE accounts. And if you haven't heard of them, it's fine because they've only been around for about 10 years or so. But these accounts were originally intended as a way for people with disabilities to save money for their future in a way that won't count against them for government benefits. So it's a really great thing. And an added perk is in an ABLE account, it is tax-free. So whatever we're investing is going to grow tax-free. And then when we pull the money out, assuming it's for an eligible expense, then it also comes out tax-free, which is really great. A couple of rules here. It does have a maximum balance of 100,000. Otherwise, it will be considered a countable asset. So we have to stay within that asset kind of limitation, not more than 100,000. And then the other limitation is annually, we can't put more than $19,000 a year into the plan. But we can invest this money as conservatively or as aggressively as we want for our kiddos' future. And we can use it really for anything that's going to create a better life experience for them. So I tell you that I think that what's really valuable about understanding ABLE accounts, if you're on today's call and you're thinking about CLE, is we can absolutely use an ABLE to pay for education. It can be used to pay for CLE services, right? It can pay for housing, transportation, really anything that's going to create a better life experience for your child. So going back to that example of the Disney trip, right? So I mentioned that the special needs trust has to pay for the tickets, the flight, the hotel, all of the things, right? It's going to pay that directly. But let's say your kiddo gets to Disney and they want to buy a treat or they want to get a stuffy or, a souvenir while they're there. Well, they can actually take their ABLE card, the debit card that comes with the ABLE account, and they can use that right at the point of purchase to access their funds, right? So an ABLE account, what I think is great about an ABLE is it does enable them to have some level of independence and access to their own money. So that's kind of how that would fit into that scenario there. But one quick thought for you guys, because a lot of the families we've worked with at CLE have had questions about 529 college accounts, right? A lot of them have already set up these 529s and they're wondering, can we use the 529 college account to pay for CLE and related services? So what I can tell you is a 529 college account can pay for education, right? And a lot of those related expenses. But for anything outside of that, then you can technically convert up to $19,000 a year into a 529 ABLE account. And then we free that up and we can use it towards some of the costs that we can't use a traditional 529 college account for. Now, Jamie actually reached out to me a couple of weeks ago, and she was like, are they taking that rule away? Right? Because the law that allows us to do that conversion is set to sunset at the end of this year. But I can tell you that I was at the Academy of Special Needs Planners conference a couple of months ago, and the gentleman who runs the Able Today program got up on the front stage and he said he was very confident that that ruling or whatever would be extended. So I'm letting you know that if you have some 529 college money and you're kind of thinking, should we convert it to Able? Now might be a good time between now and the end of the year so that we know certainly that we can have access to it, but they do expect that law will be extended beyond 2025. So hopefully that was helpful. Okay. This is my favorite slide of the whole presentation because I think it has a really great visual of the ABLE right next to the Special Needs Trust. You can see how they're the same, how they're a little different. So let's walk through it. For an ABLE account, if we're wondering if we're eligible, then as of right now, we can only have access to an ABLE account if we have that disability diagnosed medically prior to age 26. So assuming we have that, then your child would qualify for an ABLE account. In a special needs trust, there actually is no age limitation if it's a third-party trust. So I've actually seen this happen where maybe the child is now in their 50s or 60s, and back then there really wasn't a lot of diagnosing or therapies or things like that happening. And so there's actually nothing technically medically documented in the medical records with the diagnosis. That's still fine. We can still have access to a special needs trust. There's no age limitation on that. Now then, in terms of a setup, an ABLE account, very easy to set up. In fact, one of the tools that I'm going to send you guys at the end of today's call is a link to the Able Today Analyzer. So you can click on any of the 50 states and learn all there is to know about each of the ABLE programs. So that's actually something you can set up on your own. One thing I would say though is if you are in a state that has a state income tax, I would definitely encourage you to make sure you're enrolled in your personal state ABLE program so you can get that state income tax deduction. But if you're in a state like me in Texas, we don't have a state income tax, so there's really no incentive for me to use the Texas ABLE program. So if that's your case, then you can explore any of the other 49 programs if that's something that you're interested in. Okay, in terms of a special needs trust, the setup, you would need to go through an attorney for that. So that's something you would want to bring in an expert for. And again, someone who has some of the expertise in setting up special needs trust or elder law. Okay, and contribution. So in an ABLE account, the maximum we can do each year is $19,000. There's a small caveat to this rule. If your child is working and earning their own income, they can save a little bit more than the $19,000, but just to keep it simple, $19,000 would be the maximum each year. In a third-party special needs trust, there is no contribution limit. So we could put 19 million if we want. That's perfectly fine. Account balance, again, like I mentioned, the maximum we can have in the ABLE account is 100,000. Anything above that would be then considered a countable asset for SSI and Medicaid. In a third-party special needs trust, again, no maximum. We can have as much in there and it will not count against them. In terms of uses, so in an ABLE account, we can use it for a wide range of uses, including housing without affecting SSI. So this is one of the rules that actually recently changed. As of right now, if your child is receiving SSI, we have to show that they're spending at least, it's roughly $350 a month of their SSI check towards housing. And as long as they are paying at least that much towards housing, then we can use the ABLE account to offset the rest of it if that's needed without affecting SSI, right? The same thing is actually true now in a special needs trust. That's a very new rule. Prior to this change, if a special needs trust paid for housing or any form or fashion, then the SSI would be deducted by a third. But again, assuming we're paying at least $350 a month in rent, then that will no longer be an issue. Okay, in terms of taxability, so in an Able account, it does have tax-free distributions, which I love tax-free. I think that's great. In a special needs trust, no tax favors. So if the asset in the trust would have created a taxable event, we're still going to have a taxable event, right? As an example, let's say that the trust inherited a traditional 401k or IRA. Well, that's going to have a required minimum distribution every year. The IRS is going to say you have to take out X amount, and whatever that amount is, that's what we have to pay taxes on. Okay, so no tax favors in that way. Here's the big one though. In terms of remaining assets, whatever's left in an Able account, Medicaid could take it. Again, it's going to depend on your state, but in most states, Medicaid will take it. And then in a third party trust, however, we get to control that. We can pass it on to family members or even to a charity of our choice. So that I think is a really big differentiator between the Able and the special needs trust, right? And how those remaining assets are how they will work. And then last but not least, ease of access. So in an Able, most Able programs will allow you a debit card, right, that you can access right at the point of purchase. Like I said, the Disney example. In a special needs trust, though, it has to go from the trustee to the point of purchase directly, not through the child. Hopefully that makes sense. Okay, that's a lot of information. I did it in like 45 minutes. That's crazy. But just to recap, we do believe that you need a team, right? You want to make sure you have a financial professional, a government benefits specialist, an attorney, potentially a CPA. If you need recommendations to any of these, please let me know. I'm happy to make an introduction. And then as you're developing that special needs plan, just make sure you understand your current situation and your vision for the future. That kind of starts with you, right? So having an idea of what do I really want this to look like for myself and for my child, ideally down the road. Sometimes that's hard to do because we're spending the whole day just trying to get through the day. Like I get that. I'm working, I'm thinking about how I'm going to get one kid to therapy, the other kid to ball practice, dinner on the table, baths, and then all the school stuff on top of that, right? So I get it. We're trying to get through the day. But if I could encourage you to maybe designate a little bit of time to think about what really is my vision here? What am I working towards? That's a really great first step. And then the second is getting the benefits your loved one is entitled to. Utilize that government benefits specialist if you need to. If you get a denial, if you've applied and got denied, make sure you appeal it, right? And then follow it through because those benefits sure are valuable. And I don't think I know anyone who would walk by $1 million just sitting on the side of the road, which is essentially what you would be doing if you don't follow through and getting those benefits your loved one is entitled to. And then estimating the future cost of care. Again, I think we do a really good job of that, helping you understand how much should actually go into this trust and where's it going to come from? Is it going to come from remaining assets that we may not use in our lifetime? And is there some kind of a gap? I can tell you more times than not, there's a gap, right? And I get that. It's really hard to plan for our own retirements. And then the idea of having to plan for someone who we might need to financially support who could outlive us by 30, 40 years, that's extremely daunting. So if there is a gap, then how are we going to fill that? And we have some really great strategies to fill that gap so that we can rest easy at night knowing that the special needs trust will be covered in any scenario. And then last but not least, establishing and funding a special needs trust. That's where the attorney comes in, getting those documents in place, and then making sure that all of the beneficiaries are designated correctly so that the money flows directly to the trust. Okay, why Northwestern? They make me do this, so I'm going to just kind of skip over it. But where do we go from here? So I did want to let you know that if you registered for today's session, whether you were here for the live event or not, I'm going to send you all some really great tools and resources. We're going to send you something called the Special Needs Planning Checklist. This is really great no matter where you're at in your planning journey. I think it'll give you some things to think about, maybe even like a first step, right? What should I do first? The second thing we're going to send you is something called the Letter of Intent. This is a fillable PDF that you can type in, like fill it out on your own. And this document is wonderful because this is where you can list all of the things that are very special and unique about your child. Things like who are their doctors? What medications do they take? Do they have any allergies or any aversions to certain foods or activities or noises, right? So all of the things that are very specific and unique about your child and the care that we keep all up in here, you can put it down on this letter of intent. And I would encourage you to keep that with your estate planning documents. That way, if something happens and you're no longer here as a caregiver, whoever's sitting down to try to figure out how to, pick up where you left off has a very detailed and wonderful place to start. So the letter of intent, we're sending that over. The Beyond One Day at a Time brochure, this is essentially our slides, but with a whole lot more detail included. So we're going to send that over. And then last but not least, the link to the Able Today Analyzer. So again, if you were interested in setting up an Able account, this will help you analyze all of the Able programs. If you are in a state and you're wondering, does my state have the Medicaid recovery provision or have they waived it? It'll tell you on that website. Same thing on if you can get a deduction for your contribution, it'll tell you all of the great and wonderful details on that site. So you all are getting all of those resources. And then the last thing I'll mention is that we are offering all of the attendees on today's session, whether you're in person or you watched it later. If you're interested in doing a comprehensive financial plan, we'd be happy to do it for you. We have agreed to waive our planning fee for anyone who comes to us through CLE. So there is no upfront planning fee to work with us. We'll waive that. And from that, you'll get a very comprehensive financial plan that looks at everything, right? Retirement, all the things. But in addition to that, we'll make sure we have a module in there for your kiddo that helps you estimate their future costs of care so that you have a plan for how will that special needs trust be funded. Happy to do that for you guys. Like I said, no cost for you. We're waiving that. So if that's something you're interested in, just email me and let me know, and we'll get a time set up on the calendar to get started on that. And with that, let's open it up to questions.
Yes. So, Crystal, thank you so much.
Yeah.
We have got several questions, and because we have about 4 minutes left in our time frame, and again, I want to be mindful of everyone's time during their lunch hour. What I'll do is I'll just pick just a couple of questions that have come through. Then I've captured all of the questions, and then I will virtually connect Crystal with the individual who asked the question.
Okay.
Pose the question, and then you two can start a communication from there. Is that good for Crystal?
I love
Is that
that.
good for?
Great.
Hopefully that's good for attendees as well, just to be mindful of everyone's time. So first questions, one of the participants asked, what if we don't qualify for Medicaid, et cetera, due to our income?
Yes. So I'm assuming that your child might be under the age of 18, right? And so I don't know. I would maybe need a little bit more context with that, but
So
go ahead.
child is not yet 18. Child is not yet 18.
Okay. Yeah, again, I would have some follow-up questions. What state are you in? Things like that. But in some states, there are ways you can buy into the Medicaid program. You'll have to be within another certain asset, or excuse me, income limitation. But, just to kind of give you a blanket answer, you might have to wait until your child turns 18 and then reapply, because at that point in time, they're not going to look at your income and assets anymore. So. Yeah, but reach out to me if you'd like a little bit more information, because we can kind of dig in and figure out what state you're in and if there is a way to buy into the program. That's sometimes an option.
So here was another question. Thank you, Crystal. Here was another question that was asked. What is needed to prove your child is special needs in order to qualify for these programs when he or she turns 18?
Yeah, great question. So they do need to be considered disabled through the SSA definition. And on the website, it's very clearly written out. But what I can tell you is just some kind of like food for thought for you is if you haven't had a assessment done on your child within a few years of applying, that is something I would encourage you to do, because they're going to be looking at, IQ and things like that. And so you want to have somewhat of a recent assessment of those types of things, whether that's through a psychologist or different things. But a government benefits specialist can actually help you figure out exactly what documentation you need to get the best outcome. Um, so I don't know if I gave you a very good answer, but there are some diagnoses that are automatically qualified, right? Autism sometimes is a little tricky because depending on how, I know we're not supposed to say high functioning anymore, but if someone's very independent, then they may not. It's kind of a gray line. So you would want to make sure you have a recent assessment. Yeah, and I would say definitely get with the government benefits specialist to help you manage that.
Great. Here was another one that came in. Can you transfer money from a trust to an ABLE account?
Absolutely. Yeah, it's a really great strategy, actually. So yes, you can absolutely do an annual distribution of the 19,000 a year from the trust, deposit it into the ABLE account, and then you freed that money up and we can use it really for anything, right? That's going to create a better life experience. And again, where I see that kind of fitting into the picture is in scenarios where our kiddos are out in the community independent and they want to have access to their own money. They can use the able card in that way. Absolutely.
And just one more question. Again, I will connect you, Crystal, directly with the individual
Sure.
who asked these questions because there were some great questions. A lot of them are going to dive a little bit more deep into the weeds, into some individual situations. So that might be a good opportunity for you to start conversation. But just one more question. What's the difference, really quickly, between a special needs trust and a living trust for your child?
Yes, great question. So a living trust is really going to be more of like a medical directive where you basically say, like you can choose end of life type of things, right? So you could say if the doctor says that in no reasonable way am I going to come out of this, then pull the plug, essentially. I know that's kind of a little crass, but that's essentially what a living will is, or a living trust. Now, well, that's a living will. A living trust, sometimes like a family trust would be like, okay, we're alive, we own these assets, and when we're gone, they're going to be divvied up accordingly. So you can technically have a living trust that feeds into a special needs trust. You just want to make sure it's set up correctly. But what's very unique and very specific about a special needs trust is that language that essentially says, in no form or fashion, can the trustee make a distribution directly to the beneficiary. Any other type of trust, if that's the main mechanism, will allow for a distribution and will be considered accountable asset. So it has to be a special needs trust to stay in compliance. So hopefully I answered that. But sometimes living trust, living will gets confusing. Yeah. So hopefully that was helpful.
Yeah, that's great. And again, we had multiple questions in the chat. Again, many of them diving deeper into individual situations. So I will connect the two of you. So Crystal, thank you so much again for sharing your time and your expertise. I just love our partnership and I love bringing you on board. You provide such amazing information for so many families. So thank you for all that you do. And to everyone in the audience, thank you so much for spending your lunch hour with us and for your thoughtful questions. And I hope that you're leaving with a deeper understanding of your financial planning options. And just as a reminder, we did record today's event, so I will be sending out the link to all the registrants soon. So keep an eye on your inbox. And inside that communication will be Crystal's contact information. There have been several requests for the slide deck, so I will allow Crystal to upload that. And again, I'll be connecting with you individually, but please feel free to share the recording and this information and Crystal's contact information with any families or professionals who you feel may benefit from the information that Crystal shared today. And if you'd like to learn more about CLE, of course, you can always connect with me or one of our other amazing team members directly. We would love to hear from you. You can, again, my contact information will be on that email that I'll be sending out by the end of the week, but you can also look us up on our website at experiencecle.com. So stay tuned for more webinars. We're doing these pretty typically about every 6 to 8 weeks with really fun information that's just great information for parents and professionals. And again, thank you to all of our participants and to you, Crystal, just for sharing your time with us today. And we look forward to next time. So we'll all chat again soon and have a great rest of your Tuesday. Thanks,
Thank
everyone.
you. Bye, guys.